What's up, everybody? Welcome back to the channel. Today we're cutting through the noise to break down 9 stocks and cryptos that are making waves right now. From real estate tech to neuroscience and some of the hottest projects in crypto, we'll give you a no-nonsense look at each. We'll cover fundamentals, recent performance, and what the future could hold, so you can decide if any are a buy. If you appreciate this kind of deep dive, hit that like button and subscribe for more market breakdowns. Let's jump right in. First up is AIRE, or Realpha Tech, a company at the intersection of artificial intelligence and real estate innovation. They're aiming to shake up the traditional world of property investing by leveraging cutting-edge technology. Realpha's platform uses advanced AI to identify and acquire short-term rental properties, with the goal of making real estate investing more accessible and data-driven for everyone, not just seasoned investors or big institutions. Their proprietary AI, called Realpha Brain, sifts through massive amounts of data like location, rental history, local regulations, and even market trends to spot properties with the highest potential for returns. The pitch is simple: smarter, data-driven decisions instead of relying on gut feelings or outdated methods. It's about using technology to take the guesswork out of real estate investing. But it's not all smooth sailing. AIRE's stock has been volatile, reflecting both the ongoing challenges in the real estate market and the risks that come with being a small-cap tech company trying to scale quickly. The upside? If their AI delivers on its promise, Realpha could disrupt a massive multi-trillion-dollar industry and change how people invest in property. The risks? The short-term rental market is fiercely competitive and highly sensitive to economic downturns, regulatory changes, and shifting consumer preferences. AIRE is still in the early stages of proving itself. Execution and scalability remain big question marks. Can they grow fast enough and manage risks as they expand into new markets? Bottom line, AIRE is a high-risk, high-reward play. It could be exciting for risk-tolerant investors looking for growth, but it's definitely not for the conservative or those seeking stability. If you're interested, make sure to dig deep into their financials, understand their business model, and review their property portfolio before making any investment decisions. Remember, this is a speculative bet, not a safe haven for your money. Only invest what you can afford to lose. For most people, it's a stock to watch and learn from, not one to anchor your portfolio with. Let's move on to the next opportunity. Next is Promise Neurosciences, ticker PMN, a clinical-stage biotech targeting neurodegenerative diseases like Alzheimer's. Their approach: develop antibodies that precisely target toxic proteins, aiming for breakthroughs where others have failed. The stock is highly sensitive to clinical trial results and funding news. One headline can send it soaring or crashing. The potential market is huge, but so is the risk. Most drugs in this space never make it to approval. PMN is a pure speculative play. You're betting on science, not earnings. If you're comfortable with high risk and long timelines, it could be a lottery ticket in your portfolio. For most investors, though, it's best to watch from the sidelines. The outcome is binary massive success or total failure. Only invest what you can afford to lose. On to the next. Third on our list is ZIMVIE Inc., ticker ZIMV, a relatively recent spin-off from Zimmer Biomet. ZIMVIE now operates as an independent company, focusing exclusively on spine and dental implant solutions. By narrowing its scope, ZIMVIE aims to innovate and capture market share in these specialized medical device segments. The sector itself is considered stable, largely due to aging demographics and the ongoing need for non-elective procedures. As populations grow older, demand for spinal and dental care is expected to remain steady, providing a reliable backdrop for companies like ZIMVIE. However, ZIMVIE's financials have faced significant headwinds since the spin-off. Profitability has been elusive, with the company struggling to stabilize margins and return to consistent growth. Management is currently in turnaround mode, working to address operational inefficiencies and reposition the business. Bulls argue that ZIMVIE is deeply undervalued at current prices, and see potential for a strong rebound if management can successfully execute their turnaround strategy. They point to the company's established products and market presence as reasons for optimism. On the other hand, skeptics warn that ZIMVIE could be a classic value trap. Ongoing competition from larger, better capitalized medical device companies and persistent operational challenges may continue to weigh on performance. The stock is a classic turnaround story, high risk, but arguably less speculative than early-stage biotech plays. It's a situation where patience and careful analysis are essential. If you're a patient value investor who believes in management's ability to deliver on their plan, ZIMVIE might be worth a closer look. The potential rewards could be significant if the turnaround succeeds, but you'll need to be prepared to wait for real, tangible evidence of improvement before expecting any major upside. This is definitely not a stock for those seeking quick wins or instant gratification. Make sure to do your homework, dig into their financials, monitor their turnaround progress, and stay updated on industry trends. For now, ZIMVIE is a stock best suited for diligent researchers and patient investors willing to wait for a true recovery. Let's keep going. Next up, crypto. Enter Spark SPK, the native token of the Flare network, a Layer 1 blockchain bringing smart contracts to chains like XRP and Litecoin. SPK is used as collateral for transaction fees and for governance within the Flare ecosystem. The big question, will developers and users actually adopt Flare? The initial hype has faded and now it's all about real-world traction. Risks are high, competition is fierce, and the ecosystem is still young. If you believe in interoperability and Flare's strategy, SPK could be a long-term bet. But be prepared for volatility and the possibility the network never takes off. This is for crypto-savvy investors only. Don't chase hype, focus on fundamentals and adoption. Let's check out another DeFi contender. Next is Drift Protocol, a decentralized exchange on Solana specializing in perpetual futures. Drift lets users trade derivatives with leverage, all while keeping control of their assets. Its dynamic AMM provides liquidity and minimizes slippage, making it attractive for high-frequency traders. Growth depends on Solana's ecosystem and the shift toward decentralized trading. The Drift token gives holders governance power and a share in protocol fees. Risks include smart contract vulnerabilities and fierce competition from both centralized and decentralized platforms. If you're bullish on Solana and DeFi, Drift is a project to watch. The potential is big, but so are the risks. Early days mean high volatility. Only invest if you understand DeFi and can stomach the ups and downs. Let's move to another DeFi building block. Next, UME. UME, Universal Market Access, is an optimistic oracle and protocol for building synthetic assets on Ethereum. Its unique oracle design lets developers create custom financial products with flexible, cost-effective data feeds. UME's value comes from projects building on top of it, and the demand for its data verification mechanism. Token holders govern the system and resolve disputes, earning rewards for participation. The competition is tough, Chainlink dominates, but UME's approach is more flexible for certain use cases. Risks include governance attacks and slow adoption. If you believe in the growth of custom synthetic assets, UME could be a smart long-term play. The price is well off its highs, which may offer value for believers. It's a cerebral DeFi investment. Know what you're buying. Let's look at the NFT space next. Here comes ZORA. ZORA is more than just a token. It's a decentralized NFT platform built with a mission to empower creators and foster public ownership. By putting artists and their communities at the center, ZORA aims to reshape how digital art and media are owned, shared, and valued online. ZORA pioneered on-chain minting, which means NFTs and their metadata are stored directly on the blockchain, not on external servers. This ensures long-term preservation, transparency, and true digital ownership. Your art and its history are always accessible and verifiable. Their new Layer 2, the ZORA network, dramatically slashes gas fees, making NFT creation and trading far more affordable and accessible to a wider range of artists, collectors, and fans. This opens the door for more experimentation and creativity in the NFT space. The ZORA token isn't just for show, it's used for governance, giving holders a real voice in network upgrades, fee structures, and the future direction of the platform. Community-driven decisions are at the heart of ZORA's ethos. The investment case? It's about betting on ZORA to become the go-to platform for creators in the rapidly growing on-chain media space where artists can monetize their work and connect directly with their audience. Of course, there are risks, fierce competition from established NFT marketplaces, and the cyclical, sometimes unpredictable nature of the NFT market itself. But if you're bullish on the future of digital art, decentralized platforms, and creator-first ecosystems, ZORA could be a smart play for the next wave of NFT innovation. Still, it's important to remember that NFT markets are volatile, crowded, and can change quickly. so always do your own research. Invest with a long-term vision in mind, focusing on the platform's potential and community, not just short-term hype or price swings. Now let's get a little wild and see what the future of NFTs might hold. Moo Deng is a meme coin inspired by a viral baby hippo, purely driven by community and narrative. There's no underlying tech or utility, it's all about hype, memes, and social media buzz. Success depends on the strength and activity of its community. Think Dogecoin, but with a hippo. The buy case, you're speculating on a viral phenomenon, hoping to catch a pump. The reality, most meme coins go to zero, and rug pulls are common. This is gambling, not investing. Only risk what you're willing to lose entirely. For serious investors, steer clear. For thrill seekers, it's entertainment, nothing more. Let's wrap up with one more oracle. DIA, Decentralized Information Asset, is an Oracle project focused on transparent, customizable data feeds for DeFi. DIA's open-source approach lets anyone verify data sources and methodologies, building trust with developers. The DIA token powers payments, governance, and data validation within the ecosystem. DIA is an underdog competing with giants like Chainlink, but the market is big enough for multiple players. The investment case: betting on growing demand for transparent, customizable oracles as DeFi matures. Risks: slow adoption and tough competition. The price is down from its highs, which could mean value for long-term believers. It's a more conservative crypto play, but still risky. If you like underdogs and transparency, DIA is worth a look. Now let's bring it all together. That's our rapid-fire look at 9 stocks and cryptos. From high-risk biotech and meme coins to infrastructure plays and NFT platforms. Remember, this isn't financial advice. Always do your own research and know your risk tolerance. Never invest more than you can afford to lose, especially in speculative assets. Which of these are you most interested in? Let me know in the comments. If you found this helpful, hit like and subscribe for more deep dives. Thanks for watching and see you in the next video. Good luck out there.